The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the day here with the DAX on the daily chart. As you can see that we've had a 61% retracement on the daily charts, but if we go down to the smaller time frame, you can see here that after yesterday's low, we made a perfect 61% retracement today in the DAX, so it is actually holding very good support there at 12,510. Hasn't rallied much, but that's where it's sitting right now. A couple of things, folks, that look really interesting, from a longer-term perspective, and that is that gold market. We've had a situation in the gold where we've broken down below we went down to 13.19 today, and we quickly rallied to 13.31. This is really wild price action today, as you can see here from the gold chart. After we made the three drive to a top pattern up at 1362, you'll notice that we had the 382 retracement come in yesterday at 1340, and then we came down today to 1319, and from 1319 we went up to a 61% retracement right at the 1332 level. So it's still in a downtrend, but if we take out the 1332, this could be a pretty good bottom today in the gold, but that's still early in the day. But that ABCD structure that we're looking at here takes us down to that level we've been watching longer term, which is at that 1305, 1300 level in the December gold. So those are the things that I think are very important to watch in the gold market today. We're having quite a bit of action. I guess it's a report that the wild action today, folks, has been in the currency markets, and I have to send you this particular chart to show you from one of our friends over across the pond, just to give you an idea of what he was looking at. Just give me 1 second here, and we will put this up if I can find it. And that's going to be the $64 question, and it doesn't look like that's in the cards for today, but maybe I'll find it a little bit later. Let's move on to something that we've talked about over the past few weeks, and that is the copper market. If you'll notice here, as we're looking at the daily chart going back over the past year, you'll see that we've completed that big ABCD pattern up there at that 13.15 level. We've now dropped, folks, more than 20 cents a pound on copper. We've got it down to some pretty strong support here at the 295 level. If it doesn't hold 295, then this is going to be a major top of biblical proportions, and we don't know how big that is, but that's a pretty big ABCD pattern. The 382 on this takes you all the way down to 285. So we're already down 20 cents in the first week. So that's a very interesting chart. But the fact that the ABCD pattern was spot on was, I think, very, very important. I found the chart that I wanted to bring to your attention here, if you'll give me 1 second. This is the British pound chart, and there's been some news on the bank rate for the British pound, and we had a sell-off down to the 131.40 level early this morning, and then the market immediately exploded to get above the 133.20 level. Folks, the ABCD structure on this weekly chart says we're going to get to 134.75. We're not that far away. We're only about 150 points away from that. And with the strength we're having today, taking out the highs of the last 2 days with a lot of gusto, usually means that we're heading towards that level. The euro is certainly acting a little weaker, of course, because of the fact that we had this major top formed up here. If you'll look at this weekly chart, you'll see that it came in at this 130 and change level. Let's get the prices right, Larry. Time out here. Hold on here. At the 121 level, we got to 120.90. Then we backed off over 200 pips so far the last couple of days, and we're going to find if we have any support at the 118 level in the euro, but that's still maybe a day or so down the road as far as hitting. I've been asked to talk about a couple of things that I don't usually, bring up. One is the Dow Jones transportations. I wanted to bring this up and let you take a look at it. This will be discussing where we are. As you can see here in the Dow Jones transportation, we topped back on July the 13th with that little 3-drive pattern, as you can see. Then we came down and made just a little below the 61% retracement back on the solar eclipse. And then we've rallied up and made an ABCD structure up here at just a little above the 61% retracement at 707 in the Dow Jones. So this is still in a downtrend. It's one of the few that happens to be in a downtrend among those stock indices, but that's what it looks like. With the transportation index. That's going to be, very, very interesting, to pay attention to. Folks, if you remember yesterday we were talking, or the day before yesterday, we were talking about the status of the Japanese yen, the fact that it had such bullish bullish patterns that were lining up after we hit that 107 level. And then we were also referring that to the crude oil, that it was doing the exact same pattern that we had with the Japanese yen, and the crude oil has also done pretty much the same thing. Now, if you look at this crude oil on an hourly basis, you'll see here that we've gone substantially above the 78% level this morning, because we got above we've taken out the high. I just realized that we've taken out that high of the other day, so that sets up an ABCD structure that's most probably going to take us to the we're going to be talking about Bitcoin here. That most probably be taking us up to this level here. Let's just get you lined up here with this crude oil, then we'll switch over to Bitcoin. Bitcoin now is trading at 34.85. That's down 1,400 points. The high was 48.50, I believe. Most of this drop today, folks, is related to Jamie Dimon, the CEO of J.P. Morgan, and of course he knows that Bitcoin could be one of his big competitors, and he said basically it was a tulip bulb, and the tulips are bulbing today, but that's one man's opinion. But we are trading down in the Bitcoin. I don't understand cryptocurrencies, folks, but that just added to the list of the many things that I don't understand. But that's neither here nor there. Sometimes these things come in. Remember, I didn't think color TVs and microwave ovens were here, but I was wrong on those. But we'll see if this Bitcoin is going to be something. Frankly, it doesn't make sense to me that these central bankers would allow someone to come in and bring in a new currency without their approval. That's not what Thomas Jefferson thought of when he said controlling your currency. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoades, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to not spend a lot of time on Bitcoin here because A, I don't understand it, and B, I really don't understand it, but it is quite wild, as you can see. I really, the only thing I can say is of all the people that I've met over the years, I've only met one person that has actually had a Bitcoin, and that was a gentleman that I met in London a year ago last May, that had bought some, and he's made a great deal of money. He just bought it and just held it. He just was taking a flyer, and that's it. End of story. I've tried to read up on it, but it certainly doesn't make a lot of sense to me. So I try to do the little things that I do know, and even sometimes those are not nearly as much as what I would be looking at. But I do want to show you this chart that I posted in here today. This comes from one of our friends across the pond. This is his work on the Japanese yen. As you remember, coming in Monday, we were very positive to the yen because of the pattern that it made exactly at the 61% retracement at that 107.35 level. You'll notice here that he was looking for the first resistance on this to come in at 111. Folks, the high today was 111.04. And it immediately dropped $500 from that spot, almost like what happened in Bitcoin today. But that's just a situation of what I wanted to discuss, and that is trade preparation. As you'll see here, he set up his swings to see where the resistance would come in from previous swings, and that's what he was looking at. And when he came up with three ratios coming together at the same time, that gave him a high level of confidence that the market should stop at that level. Now, the $64 question is, did he know that? Of course he didn't know that, but he was willing to take a calculated risk, given the work that he had done, that this should be some strong resistance. This particular time, it worked perfectly. Now, had it not worked, he would have been out his $500 immediately, if not sooner. I think he was risking only $300 on this one, but the fact that it hit it spot on and backed off is the reward you get when you do the work. And like Twentyman says, defy human nature, do the work yourself. So that's just a trade setup that he was working on. I wanted to share it with you for two reasons. One, he took a great deal of effort to do this. And the second reason was that it worked absolutely perfectly today, which is what we like to see. Now, I wanted to move over again to the stock market for just a moment and talk about Apple. The reason why is because if you notice here, in Apple, we completed a really nice ABCD pattern over the past couple of weeks. You'll notice the 78% retracement when the market came out, or when Apple came out with its new iPhone 10. And then it sold off from 164 down to 158. And now we should get a little bounce in Apple today up to maybe the 161 level. But if we get below the 157 level in Apple, that's telling us that the extent of this move to the downside is just starting. And the reason why we say that is because the CD leg would be exceeding the AB leg by more than 1.27, and that is usually a very negative connotation. So that's something that keep in mind on Apple. If we get below 156, that would not be a good sign in Apple. The fact that the news was out and then the market didn't react. Remember, when you got a phone that's selling at $1,000, those are a lot of clams, folks, and a lot of people are still not out of the woods yet with all the stuff that's going on. And when you think about the, hundreds or millions of people in Houston, in Texas, and also in Florida, I mean, you got a lot of consumers there. They're not going to be worried about buying iPhones, at least for the foreseeable future. But the rest of the country, is holding together, relatively well. So we'll see what that happens. That gets into the supply-demand stuff that I'm really not too much affiliated with. So we'll watch it as we go through and look at some of these other charts that we wanted to look at. Now, I wanted to bring up the October cattle because we know we have some folks here in the den that are actually involved in this cattle. And we tested that 105 level again yesterday, closed quite strongly. That tells us that we should get up into that 110 level in cattle if, in fact, it can make that retracement the way we think that it's going to do it. So the $64 question here is it going to do it the way we think it's going to do it? And the market will tell us that. But the ABCD structure on that cattle takes it to the 110 level, without any trouble at all. So those are another one that looks interesting, from the long side of what we've been following. So someone's asked a question, is this the top in the Japanese yen? I don't know if it's the top in the Japanese yen. All I know is it's a top in the Japanese yen. That's the bottom line of what we're looking at when we follow these things. So that's I think that's a very important thing to remember, that these are all based on probabilities, folks. They're never based on certainties, and that's a really key thing to remember as you're looking at these charts. It's all related to, what's going to happen in the future based on pattern recognition, because pattern recognition gives you a leading indicator. That's the real beauty of it. You're not waiting for something else to happen, like a 200-day moving average or a 50-day moving average. Those can be very important also, but you really want to be able to say, how much do I have to risk to see if this pattern is going to work? Just like in the Japanese trade that this young man did, he had a lot of numbers coming in at 111, and he knew above 111.30 he was most probably wrong, but the market rewarded him for his analysis, and that's what the trading is all about. Just like the Apple, we don't know whether Apple's going to rally from here or not. We do know that if it gets below 156, that would be a very negative sign in Apple from a technical perspective over the last 3 or 4 days. Also, given the fact that they came out with such a wonderful presentation, and the market did not handle what we assume to be bullish news very well. That would be a very negative sign if you were doing that. So that's what we're watching here in the Apple today. So if it gets below 156, that would be assuming that we're looking at something would be quite negative on a longer-term basis for Apple, just based on the technicals, not anything to do with the phone or anything like that. Those are the fundamentals that we don't really follow too much. If we take a look here at the euro here over the last hold on one second here. I got the wrong chart up, folks. Bear with me just 1 second. I've lost that. I want to get to the main chart here if I can. Oh dear. Okay, let's get to see. Maybe this break will save me. I can't find the chart that I wanted to see. Oh, here it is. I just want to get this Dow Jones chart up to show you, and it's not updated, so I've got to update that, which I'll do at the break, and we'll move on to see how it works after the break to get that up and maybe able to do it. So that's where we stand right now, and we got a break coming up. Hopefully I'll be saved by the bell here in just a second, and we'll see if that's going to be the case, and then we'll move on to stage 2 here. I do want to show you this Japanese yen because it's had a tremendous move off of here, and it looks, very, very interesting. So let's just get this up, and then we'll be right back. 877.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from EverBank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. EverBank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the Dow Jones Industrial Average. As you realize, they have not gotten the memo that the market is supposed to be going down. And that's the way it is. It did make a new high above the August 31st level. So that's the thing. We have not made a new high in a few of the indices, especially the IWM has only made a 78% level, but it's a much smaller market, and it's been the weakest of all. But this is the final day. I've got Walter, my young burro, all saddled up, filled up with canteens with fresh water and some muscatel. And so we're ready to head out into the desert sometime later today. So if you don't hear from me early in the morning, you know that I've reached the Chiricahua Mountains, and I'll be building my hut as I practice working with my new system of the 50-day moving average, crossing over the 200-day moving average to see if I can understand what's going on with these markets. Folks, I'll tell you, not very often do the markets, surprise me. This one surprised me this week with the strength that we had Monday through Thursday. This thing was really ready to go down. I figured it was going to be strong on Monday because the storm wasn't nearly as bad as, the news people were selling us, but that's neither here nor there. The market still continued to go higher. Remember, markets are seldom wrong, but men are often wrong. That's a quote from Roy Longstreet, my old friend. Anyway, let's take a look here at the IWM, and you'll see here that you'll be looking at we made a 71% retracement in the IWM. That means if it's up today strong, then this is certainly failing also. But we did make a new high in the Dow. We've made a new high in the NASDAQ. We've made a new high in the S&P 500. So this is going to be very, very interesting. This is the last day, folks. This is what we call the day the Alamo has been surrounded. So we'll see if this is going on. Fact is, a really interesting comment came from Art Cashin this morning. He equated this rally here this week in the stock market to Napoleon when he went into Russia in 1812 to conquer the Tsar Alexander. Alexander had already left, but what they didn't realize, what Bonaparte did not realize, is the fact that the generals had let all the prisoners out of the prisons and told them to burn the city down and they could go free. And so Napoleon thought that it was his men that was doing the burning and the looting, and he didn't realize it was too late. After 3 months of a terrible campaign against these prisoners, he lost over 90% of his men and retreated in defeat, and that was the end of him. So it was a very interesting analogy that he said the same thing was going on, with the shorts. And believe me, I can see the fires over the Kremlin to this day. But we'll see what happens tomorrow, and we'll go here. This is the second longest bull market in history, I believe. I believe it's surpassed the one from 1932 through 1941. That's what I'm not sure the exact dates of that, but I know it's the second largest bull market, longest bull market of all time. So we will wait and see how this ends up over the next few days, but it's going to be quite interesting, to keep a close eye on it. Could someone please be kind enough to give me the last price of Apple, because I'd like to see it should be getting higher today, and I'm using that as sort of a benchmark of what the market should actually do. Yeah, good. It's 59. That's what I expected. I thought it would get up there. 161 should be a little bit of resistance in that. And that's what we'll keep an eye on as we look at some of these through the rest of the time. I wanted to bring one other chart up that we talked about earlier, and this is a chart from Bloomberg, and I wanted to give you a quick survey of their heads up on this. This is the long-term ABCD structure between equities and commodities, and as you can see now, we're below where we were in the 1970-1974 level. In other words, this is saying the relationship between equities and commodities is at the biggest level in the last 43 years. So this should be a major bottom in here as we're starting to see, buying come into corn, wheat, and beans. We've had a really strong rally here in beans coming off of that report we had the other day. We're already up 25 cents off of that level. So keep a close eye on beans, because they could be ready to, make a pretty good turn somewhere in this time frame. So those are some of the things that we want to be watching very, very closely. Now, one other thing that we talked about a little bit, and they were talking about it in the den this morning, is the fact that this price that we've posted here for the Treasury bonds. Let's just get it up here so we can take a quick look at it here, and you'll be able to see here. There we got up to that 115. We're now trading, we're down almost 5 handles on this, folks, in just a week. That usually means that interest rates are most probably getting ready to go higher. That's, at least that's what I'm assuming, because the pattern is certainly very, very clear. If we look at the long-term pattern by using the Treasury note chart, this is really a very, very negative picture here, folks. You'll notice the head and shoulders pattern that we have in the Treasury notes. You have just absolute perfect symmetry between the shoulders. In other words, the time between the left shoulder and the head and the right shoulder is perfect. You've had almost a 50% pullback, and it's taken 6 months to do that, so actually 8 months. So this has a very negative connotation to it. We're already down a couple of handles, from that level. So I think it's important that we pay pretty much attention to it. So we'll see. Regarding these numbers that they get with the that they give for this inflation, folks, believe me, those numbers those are made out of cannon fodder. Believe me, they make those numbers up. How do you do a price index where you don't include food and energy? Give me a break. So we'll see. Then someone's asking a question, how long will the NASDAQ be down? It will be down until it finishes going down. That's the only thing that we know. So that's neither here nor there. But anyway, we're over a critical time here, but whether it works or not, certainly remains to be seen. That's the bottom line. I do want to show you one other chart here, which is related to the euro. This is a very important chart from foreign exchange traded folks, because this is one of the very nice cross rates. In other words, the cross rate between the euro and the British pound. And with with Brexit coming in, you're noticing that the euro is losing to the British pound. That means that the Brexit talks are going in the favor of Britain versus the European Union. That's what this chart is telling you. Now, as you can see here, down about another 50 pips from where we're trading right now, which is right at about 90, 89.99. If we get down to this 89.30 level, that's going to be a 61% retracement off the low from July, and it'll be a perfect 382 retracement off the low in April. So let's keep an eye on that one. So live every day in an attitude of gratitude, and I'll be right back. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from EverBank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. EverBank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to take a look at the wheat market here. As you can see, we had that big move down, and what it's doing right now, it's completing a small ABCD pattern that should take that Christmas wheat up to about the 452 level. We're trading around 446 or 7 right now. But yesterday on Tuesday during the crop report, it backed off right to a 61% retracement, similar to what we saw in the soybeans, and now we're completing this small ABCD pattern. The structure in the bean complex is really being run by the oil market because that market has been the strongest. We've had one other question about one of the charts that we posted here last week that had some potential, and we'll bring it up here to take you a look at it. This is coffee, and as you can see here, we highlighted this because of the fact that it was very unusual that since the 14th of August that we hit that 61% retracement 6 different times and never went below it. I mean, that is, maybe Fibonacci doesn't work, but boy, it certainly worked on this one. What I would take from this is the fact that when you see these numbers being hit as often as they are, that's telling you that somebody is making a stand that they want to be long coffee at that point, which is around the 127.50 level, and we're trading, 10 cents a pound higher now, which is almost $5,000 in the past 6 trading days. So when you see those numbers come up where they keep hitting major support, much like we saw in cattle, if you remember, at the 104.50 level, and now it's trading near 108.5. That'll tell you that there's some strong support, and that's all it's telling you, folks. It doesn't tell you any more than that, and that doesn't mean that the support can't be broken. All it means is that that's what you're looking at is some strong support, and that's the bottom line of what you're trying to see as you look at some of these charts. So that's the key thing to remember here. Someone's asking a question about the copper. Just one second, I'll bring it up and I'll show you what I was talking about just a little bit later before. Remember, they used to call this Dr. Copper, that it said what the stock market was going to do. We topped here early in September, and we're down sharply. What you'll notice here is that the first strong support here will come in at the 382 level, which will be at about 291 a pound. I believe we're at 294 and change or something right now, so we're about 3 cents away. But that big ABCD is very, very important. The last time we had one of these, copper backed off over 30 cents a pound. So 30 cents from the 315 level would take you down to 285. So we could easily, make the 285 level too. But the first really strong Fibonacci support level comes in at 291 in the copper. And you would want to be watching that every day. this is just a straight down move from the high being made, folks. So you don't know whether this is the major high or this is the, another buying opportunity for another leg up. My assumption is that the fact that you've made that big ABCD pattern, that this is going to be something bigger than the normal correction. So that would take us down probably close to 45 or 50 cents per pound in copper. Whether that would be bullish or not, I don't know. But, the market doesn't need any help to be bullish. The Dow Jones is up today. The other markets are, down just a tad, but not very much. So it's giving you a pretty good indication that this market is still very, very bullish, and that's the main thing to look at. I wanted to talk just a little bit about this Australian dollar because we've had a pretty nice sell-off in the Australian dollar this week. This is where we stood coming in here on Sunday night. You'll notice Friday we had the shooting star candle, and we broke down well over 100 and some pips this week. Whether this is just a short-term correction in the Australian dollar, we don't really know that. It's just the fact that it did complete the big ABCD patterns and left that shooting star candle. And as we know from our good friend Steve Rhoades, that is one of the more distinct patterns in candlestick analysis, is the hanging man, which is the bullish side of it, and the shooting star, which is the bearish side of it. So those are some of the things that we certainly want to watch, very, very closely as we look at the Australian dollar. The Canadian dollar also had a pretty good rally this week, and but let me get the longer-term chart up here on the Canadian so we can take a look at this. And this, of course, has a very high correlation with crude oil. So with crude oil possibly breaking out today, we should be assuming here that this Canadian dollar should start to strengthen and maybe get us down to this old level of the 114.80, which is the 61% retracement of the move from 2011. Right now we've only hit that 50% level, but the ABCD structure on the Canadian dollar takes you down to the 115 level. So we're about 7 handles away from that, but we want to watch it very closely because it's one of the bigger ones that makes it really interesting to follow for sure. So right now, let's see, we got the bonds the bonds are very interesting here, folks, because let's get this up here. Let me get this up so we can take a quick look at it. I want to show you what it looks like on the hourly chart so you can take a quick look to see that we're right at a major support here. We're right at that 61% retracement, so give me 1 second and we'll bring this up here so you can take a quick look at it. This 154.10 level is very important. That's a 78% level from the low back on the 14th, which was the right at the solar eclipse, and then we had the lunar eclipse, and then we had the solar eclipse coming in on the 21st, and it's also a 50% retracement from the low way back in September. So this is a really, really strong spot here for support here in the Treasury bonds. I mean, it is just this 154 level is just absolutely imperative that it stays above that, because if the bonds get below the 154 level, that's going to be down 4 handles this week, folks. That is not a very bullish chart if you see that, because it's very, very dangerous for the fact that you're looking at something that is breaking down. And remember, long term, that high that we made at 158 was nothing more than a 3-drive pattern to the upside, which is in a bear market. That was only making, barely a 50% retracement of the last rally high. So interest rates appear to be going higher. The $64 question is whether it's going to continue that or not. So let's watch it closely, because this 154 level in the bonds is extremely important by any stretch of the imagination. And of course, today is the last day from the old bedrock, so we'll see what happens here if the market continues to go higher. And we'll do one thing at a time as we go through here. But watch these bonds, 154. They get below that, and they're a full point almost. Well, they are a full point away from that. So that's been strong support so far this morning. But we want to watch it very, very closely, much like we did, at the gold at that 1340 level. So That's another one. Right now in the gold, we're trading at $13.29. We've jumped more than $10 off the bottom. 877-927-6648.
Hi, I'm Steve Rhoades, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the New York Stock Exchange Index. You know, we left a gap up. We're still at that area. We've got a small pattern here, a butterfly pattern. Whether that means anything or not remains to be seen. But I do want to bring this to your attention. This is still quite bullish in these things. It would take some type of minor miracle to turn the markets at this time. But this is what the Bradley market is for, and the model is for, but whether it's going to work this time or not, this is the last day for it. So the last train to Gun Hill has taken off. Let's finish the show up here with Apple. I wanted to show you the ABCD structure up to date. We're looking for a little bit of a rally. We haven't really rallied very much. It opened at the 61% retracement of yesterday's low. That came in at 158.5. the ABCD structure on this takes us up to that 160.50 level, which is what we would be expecting, which would match the last rally. So if Apple can get above the 161, which certainly is possible given the fact that they have all these wonderful products and they sell them to everyone in the world, they could certainly do that without too much. Folks, there's one thing we really need to watch is watch the price of 24.97 on the E-mini S&P. If that is the high, I'm going to share with you some really interesting geometry stuff over the next few days if we get to that level, but that is 24.97 in the E-mini S&P for December. So watch that very, very closely. That's the key thing, to pay very close attention to. But the market is still, relatively strong here. We're trading at 24.93, had virtually, no volatility so far this morning. So it's going to be quite interesting. The grains are, doing pretty well this morning. So that's good for the farmers, which really is terrific. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom OBrien's daily market letter, Market Insights. Tom OBrien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.